let's talk about the big elephant in the room, the Solana ETFs. This article was written yesterday, and Canada's Crypto Innovation Explained. So, what are spot Solana ETFs and why are they important? As you guys know, we talked about Bitcoin ETFs, exchange tradable funds, and in particular, how that adds exposure for 401k retirement funds in a lot of cases that, other people might not have gotten exposure to Bitcoin, how that is, against the Bitcoin white paper in theory, but makes sense as far as propping up the price. Solana is a little bit different, already centralized, doesn't really have the tenets of Bitcoin in general, but is going to be looking at maybe getting a spot ETF. And it will hold tokens directly, providing investors real-time exposure to the asset's market price. Rather than using complex trading platforms or crypto wallets, you can access Solana via a regulated financial product traded on a traditional stock exchange. The value of Solana ETFs is directly tied to the open market price of SOL, offering a simple way to gain exposure to the blockchain's performance without directly holding the asset. Unlike futures-based ETFs that use derivative contracts to speculate on Solana's future prices, a spot ETF tracks the performance of the actual asset. This distinction is significant because futures products may face pricing inefficiencies, leading to performance mismatches over time. Spot ETFs are more transparent and directly reflect SOL's real-time supply and demand on the Solana blockchain. Spot Solana ETFs mark a significant step forward toward mainstream crypto adoption. These products enable retail and institutional investors to gain exposure to the Solana ecosystem while operating within the bounds of securities regulations. Like spot Bitcoin and Ethereum ETFs, spot Solana exchange traded funds are expected to expand market access and serve as another entry point to decentralized finance for traditional investors. On April 16, 2025, 4 spot Solana ETFs started trading on the Toronto Stock Exchange following approval from Ontario Securities Commission, the OSC. With this, Canada became the first country to launch spot SOL ETFs with staking. The OSC granted approval to the spot Solana ETFs of 4 asset managers, 3iQ, Purpose, Evolve, and CI Financial. Unlike products that only track Solana's price, these funds hold Solana tokens, giving investors direct ownership of the asset. The funds are secured via institutional-grade cold storage custody. Each fund tracks a distinct Solana-related index, offering diverse strategies with on-chain asset backing. Despite their structural differences, these ETFs are all designed for long-term investment, reflecting the issuer's strong belief in Solana's future in DeFi. By incorporating staking, these spot Solana ETFs provide an active way for investors to earn returns in the cryptocurrency market, all within a regulatory framework and secure institutional-grade custody services. Now, that's pretty crazy because that would be the equivalent of essentially having an ETF in a Bitcoin mining farm at the end of the day where you get those returns. That seems beneficial. These ETFs enable staking through partnership with TD Bank, allowing the SOL they hold to actively support and secure the Solana network. In return, the network issues staking rewards, which can be passed on to investors. Since Solana typically offers higher staking yields than Ethereum, this structure may translate into greater potential returns for investors. By offering staking, these spot Solana ETFs may boost returns for investors by an estimated 2 to 3.5% annually, in addition to the performance of the underlying SOL. The ETFs generate yields by working with staking partners that delegate up to 50% of the fund's assets for staking. Staking rewards generated by the ETF are typically shared between shareholders and the fund manager, with the specific allocation varying depending on the ETF issuer. Management fees on the spot Solana ETFs vary from 0.15 to 1%, with the same providers offering fee waivers during the initial launch phase. After 2 days of trading, the combined assets under management for the 4 ETFs total about $73.5 million. Staking Solana may yield higher returns than staking Ethereum. The ETFs intend to pass these additional rewards on to investors, potentially reducing the long-term cost of owning the ETF. So there is a comparison chart here between the Solana ETFs, the different ones available, what their management fees are, and the issue dates. I think this is all in relation to, of course, Canada. We don't have access, I don't think, in the US currently, do we? No. So it's going to be passive income through proof of stake networks. And Solana is obviously a massive player within cryptocurrency. I don't know. Is this better than a Bitcoin ETF? If you had, access to this where you get recurring revenue on top of the performance of Solana in general, and you're already outside of the Bitcoin maximalist standard of paper trading and not transacting with banks or intermediaries, and you're throwing your 401k retirement at this, would you rather put your retirement into a Bitcoin ETF or a Solana ETF that has the potential to generate additional revenue? I don't know. This is a pretty interesting financial product at the end of the day. So it goes on to say that despite a subdued global economic climate, partly shaped by trade tensions during Donald Trump's presidency, Canada's regulators have taken a proactive stance, embracing innovation in the digital asset space. This is a complete 180 from where we were at just 2 years ago or even a year ago. The green lighting of Solana ETFs with staking reflects maturing approach to crypto policy and signals confidence in alternative layer 1 networks. Meanwhile, in the United States, anticipation is building. The launch of Solana futures on the Chicago Mercantile Exchange on March 17th of 2025 is seen as a stepping stone towards a U.S. spot ETF. The SEC is currently reviewing 72 crypto-related ETF applications as of April 21st, covering a spectrum of assets from major altcoins like XRP to meme coins like Dogecoin, including proposals for leveraged and derivative products. As of April 21st, 2025, the SEC is reviewing 72 crypto-related ETF applications, including derivatives. The filings range from major cap altcoins to meme coins and include leveraged products and options. The outcome of Canada's pioneering approach may offer valuable insight to regulators and could potentially influence the SEC's decision regarding these filings. However, the SEC's stance may differ significantly from Canada's due to structural and regulatory complexities within the U.S. financial system. Unlike Canada's more unified regulatory framework, the U.S. divides oversight between multiple agencies, including the SEC, CFTC, and state regulators, creating friction in crypto policymaking. I mean, the SEC would take on securities like Solana. CFTC will take on, commodities like Bitcoin and proof of work, and it's pretty straightforward. I think at the end of the day, Canada's trailblazing move could nonetheless offer a valuable case study for U.S. regulators. Thanks for the sub, Blood Curve. As markets await the SEC's decision, the key question remains whether Washington will follow Ottawa's lead or chart its own course and a slower timeline for non-Bitcoin spot ETFs. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.